Ryan, it's time for the word on Wall Street. Top investors watching your money. Joining me now is Payne Capital Management President and Payne Points of Wealth podcast host, Ryan Payne. Also with me, Rebecca Walser. All right, guys, let's start with Ryan. I'm going to start with you on this. We've got futures down again, second day in a row. We lost a couple hundred yesterday on the Dow. Now we're down 65 in the pre-market. So if you say that the real month of September kicked off yesterday, I'm not sure how we're all feeling. But Apple, Alphabet, Nvidia, Intel, TSMC, all considering, or they're all considering buying shares in this chip design firm ARM, which is this IPO.
Yes.
The target valuation is $52 billion. This is kind of a big story that's been flying under the radar for the markets, and here we are today.
Yeah, here we are, and it's going to be probably the biggest IPO since we had Rivian, which was back in 2021, which was an EV car maker, which hasn't fared well since. But I think
not the best comparison, Ryan, but okay.
No, but as a sign of the times, I think this is a good sign for the capital markets. You're starting to see IPOs come back. In fact, crazy Birkenstock should have an IPO later this year, which 5 years ago I thought that was like the worst looking shoe ever. Now everyone loves them. Yeah. Company's been around since 1774. Fun fact. 2 years before independence, and that could be a big IPO this year. You have Instacart's another big one. So, that's a really good sign for financials, which obviously M&A activity has been really dead since like the last 2 years. So I suspect this is a good sign for the capital markets. It's a good sign for the market in general. And again, my philosophy is you want to use the Wayne Gretzky strategy. You want to go where the puck is going, not where it is, where the market's going. So I think, broadening out your exposure and owning things like financials here, which are going to benefit from the fact that the IPO market is starting to pick up again.
That would be nice to see that. It has been certainly slow, Rebecca, that we haven't seen a lot of big names come out. And because I think it was a lot of the warnings that we had going into 2023 because of interest rates and the Fed. People were nervous, especially when it comes to tech stocks.
Well, I think venture capitalists, too, look at SVB and look at liquidity issues. And the lending metrics were a lot different, obviously, going into this kind of time frame than they would be in a bull run that we just knew was going to had just started, for example.
Rebecca, I want to hit on something that crossed at the top of the hour about 14 minutes ago. We got the 30-year fixed mortgage data.
Yeah.
It actually fell. It dropped to 7.21%. This is last week. I mean, these have been volatile lately. But mortgage applications fell 2.9%. Yeah. So obviously, the housing market is a big economic story, and we are seeing pressure in housing. I had Lawrence Yun on last week on Maria Bartiromo's Wall Street show Friday night. He said 8%. We're going to 8% on the 30-year mortgage rate.
It would normally be a housing crisis, right? At 8% after lower for longer for 15 years, people do not expect to be paying 8%. The problem is we have an inventory problem. So Zillow is basically saying we're still going to see rising home prices into 2024 because there's not enough inventory. And right now there's enough of a bifurcation of the economy that there's still enough haves that can still afford an 8% mortgage, even though they don't want to take it. And so that's what we're seeing. But you know what, Cheryl? There is a tipping point. And the question is, when do we get to that tipping point? When are people going to say, I have to rent?
Well, the renting in the suburbs, we're now finding out. There's a new piece out this morning that talks about the fact that because so many families left urban cities, so many people left urban cities during COVID with crime, things that we're just talking about in the last block.
Exactly.
That now they've gone out to the suburbs, but when they're renting out there, now rents are getting jacked up in the suburbs.
Yep.
Yeah, no, it's huge. I mean, if you live here in New York, too, I mean, rents are they're just astronomical, right? You're between a rock and a hard place. I will say this, though, if you look at rents nationwide, they have actually started to come down over the last couple of months. If you look at Zillow and you look at the numbers, which is important because that CPI number, which is to lag the rental number, that's going to start coming down as well, which should be good for looking at what that consumer price index does next week, because that's what everyone's looking at, because that comes in weaker. The Fed just might hold on the pause on interest rate hikes, which I think they will. And then even next year, they could start to cut again, which would be a phenomenal boost for the U.S. economy. So I think right now, if we see CPI continue to come down, which I've been saying it has been, and I think it will continue, and that rental input or that shelter cost is a huge component of that.
That's a good point. I know Ryan thinks we're done with Fed rate hikes. Rebecca, do you agree with that?
I see a pause in September, but barring any massive economic situation, I see another hike in October. Even though labor is softening, and even though that's been passed out, I see a pause, and then I see another hike in October. He's just too hawkish in his Jackson Hole comments.
Even though I would think that the Fed chairman would know this, that there is a lag on the effects of rate hikes. It takes time for these to work themselves out. And a lot of consumers, let's be clear here, were really enjoying their summer, but there's a lot of data suggesting they're going to pull back.
Yeah.
And that you're going to, I don't know. I mean, I have to think that he might take that patient.
We all pray that that's his stance, but we haven't seen it. We haven't seen it. And he was so hawkish in Jacksonville.
Chairman Powell, if you're watching this program this morning, take a break. Take a permanent pause. We would like to see that. Ryan Payne, thank you very much. And Rebecca's going to stay with us all morning long.
Great to be here.
All right. We've got a lot more coming up this so much. And I'm going to expand on this with you, Rebecca, because she mentioned Phoenix. A lot of those investors were buying up Airbnbs. They had an Airbnb near a golf course or, a lake or whatever.
Yeah.
And those Airbnbs are now empty. So they're having problems there.
Yeah, I'm really surprised to see 45% because most of these investors, usually the ones that I'm working with, aren't leveraging capital. They're actually just buying for cash. And so it's interesting that the mortgage rates would really push investors. What it tells me is that they feel like the market might be overpricing now, and they're afraid to actually get a return on their investment. So it's very interesting, and it just is a further puzzle piece to this whole bifurcated economy.
Yeah, for